Hi, today we will discuss company data and how it is important for you. Once you find a good stock for investment, you need to look at certain parameters to be sure that it's a good investment. Then start your research to check whether or not this company will grow, because if it will not grow, then it's not worth investment. Read the company's quarterly financial statement. It will tell you about the quarterly health of the company, the financial health. Read SEC filing. If there is something wrong, SEC will be asking the company about it, why this is happening. And if the company is very good, it will be informing SEC about its new products. Check the company's vision. If the vision is good, there is like 50% chance the company will grow. Never purchase a penny stock on advice from some scammer. Someone emails you XYZ company is hot, don't go for it. Do your research first. You cannot just fall into some scammer's hand and make a loss. Then research the company's balance sheet. Think like buying a car. Will you buy a non-working car? No, you won't. That's the same thing that applies to the company. A balance sheet lists all the assets that the company owns. Get the asset, get its price, and divide it by share so that you can understand this much assets are like with the company on per share basis. At least you know your share will have this much worth if the company goes out of business. Check cash, liquid investments, and loans, because remember you need to pay loans. So if the cash and liquid investment are like pretty low and loans like prepayments are pretty high, then this company cannot grow because it needs to get out of debt first. If the debt is so much that it will kill the company, then it's not worth the investment. Check equipment and real estate or any other form of property. Now, this is really important because the equipment will help you understand how good a company is. Its real estate will help you understand this is a real estate that is like part of the assets of the company. So if the real estate is worth say 10 million and the company have 10 million shares outstanding, so it means $1 per share is for the real estate. So at least the company should be worth $1. And understand it like this and make it count. Make the research, expand on it. Check loans whether they are short term or long term, because if they are short term, the company will always be looking to get the repayments done. And on the short term loans, the repayment is usually high because the interest rate is high. Whereas on the long term, the interest rate is low and therefore the repayments are low. And the bank that is giving them the loan, if it is giving them on the long term basis, then that means the bank also believes in the company's growth. If it is giving on the short term basis, then that means bank also do not trust them. Assess if the company have enough cash and assets to pay its liability timely. Because if you won't pay it timely, you'll be charged extra money. So that extra money will be like a real a real problem. So always check this. Check the profitability. Review the company's profitability if it is in profit or if it is not. If it is in profit, why is it in profit? Check the company's income statement or statement of earning. How does this company generate income? What is its earning per share? Check the revenue and expenses. If the expenses are far higher than revenue, then this is a shitty company. If the revenues are increasing at a good pace, brilliant company. Always check if the company have a positive operating income. Now operating income means, let's say you are a company, you made $30 from sales and invested $20 on like procuring the product or like going to the client, salaries, etc. And in the end, if you invested $30 and sold the stuff at $30, then you made a $0 operating income. It's not worth it. You need to grow the money. Then check the operating loss. Why is it? Is it due to the debt or is it due to the company's like bad procedure or bad sales? This will help you find a growth company. Check cash flows. Check if cash is used to operate the business and investments because investments usually will grow. The business usually will grow. So the cash used in them will automatically grow over time. And this will also tell you if the business is growing or not. If they are not using the cash onto the business or onto the investments, then they will not grow. If they are like investing cash into the business or investments, but they are still not growing, then even it means that they are doing something wrong. Check if cash comes from loan or from revenues, because loan means that you need to repay it, whereas revenue means it's your own money. These spending will tell you whether the company will grow or not. Because if they are like going on in the right direction, the statement, the cash flow, the balance sheet will tell you that it is. Otherwise, it will tell you a completely different picture. Check if it is struggling to pay its debt. If it is, then it's a bad company. Because the company needs to decide how to pay the debt first before even taking the debt. If it is struggling, then this means the company's business model is bad. If it is spending more money on financing than operations or investment, then this means there is a shit company because it should be investing more and more on operations on business rather than on financing.